Okay, welcome back everybody, and again this is a 2D video to explain how to trade a continuation market. Okay, so on our previous videos we touched on few topics on types of setups that you need to know, which are trend exhaustion or trend reversal patterns, right? We learned about all the patterns that you need to know when the market is about to reverse. All right, right about now we are going to learn about the continuation in the market, right? How to catch some continuation. Okay, now the first continuation that you need to know is what we call a bearish flag or a bullish flag. Okay, what's a bearish flag? What does a flag look like? Let me just draw a flag, right? The flag looks like this, guys. A flag looks like this. Okay, this is how a flag looks like. We all can agree how a flag looks like, right? The market, so the flag can look like this, and the flag could also look like this. All right, depending with the orientation. Okay, the flag could also look like this. Okay, so now look at this. When we are trading in the markets, right? For example, again we're continuing with our strategy. We have seen something like this. This would imply that this is an M setup. The market comes all the way down, reaches this level, and retest, and then we can sell. Already we'll be in the market already, and then the market can do something like this. Usually currencies like these setups, right? So this is a flag. This is a flag. As you can see, the market came all the way down to make a bearish flag. So this is an imitation of what the market does. Okay, so how do we trade such thing? So when the market shows us that this is a trend reversal pattern, a breach, and then it starts to consolidate a bit shortly after that, the market, so what we do is that when the market just does this, touches there, we can simply sell from there. Okay, and put our stop loss right above there, because also this high could be a bit higher like this. It can come and make a higher high like this. Okay, and imitate again this M, just like this M. These highs, these tips are not at the same size. Okay, so it can do the same thing. It can imitate and does this, and until it breaches down all the way. So otherwise, so that's the reason why we have to put our stop loss right about there, just above. Just leave a room for the market to breathe a bit, so that you won't get out or you won't be stopped out easily or prematurely. Okay, so this is your first entry point. Okay, the market, however, let me just stretch this up, can carry on ranging in this because it's making a flag. Okay, it's making a flag, and then it breaches the market can do this. Okay, looking for these points. This is how you trade what we call a continuation. Okay, so why is it a continuation? Because your first entry point was based on this trend exhaustion setup or this reversal pattern, okay, which was an M setup. So you entered because this was a retracement. You enter right about there, the market does this. When the market breaches right about there again, you can enter these type of trades. But I have heard some people say that, well, you can even enter this one and put your stop loss right about there, and I hate to do this, guys. If you're entering your flag, always put your stop loss right about above the flag, which makes me always like to say a flag is just it's just one of those setups whereby most of the traders would have entered them way before they even happened, because they would have based the analysis on this previous setup, right? Like this previous setup, breach, retest, enter, and then you put your stop loss just above there, and then the market just keeps on doing this until someone really now knows that, okay, now this is a flag, and then they enter right about there, and then they put their stop loss right about there. So this is just like, for the late entries. For example, maybe let's say you were not there when the market was doing this, and then after some couple of hours or minutes, you have seen that the market has made a flag, and then the market is now there. You can actually enter again right about there. But spoiler alert, don't put your stop loss there. Always don't put your stop loss there, because you don't know whether the flag has ended its phase of the flag, or it wants to now to impulse. Because sometimes if you do this and put your stop loss right about there, what does the market do? The market will bounce again and take you out. You see? And then what does it do? It leaves you out. That's the reason why some of us like to put our entry points, our stop loss right about there above the flag, always. So it's a caution, guys. Always be cautious in these markets. The markets are not our friend. The markets are here to kill some people and to make other people rich. Alright, so be part of those ones that are rich. Okay, so the market usually does that. Okay, the other entry point of the flag, which is more safe, is this one. The market breach, the market comes and then does this right about there. When the market now breach significantly, if it just pushes significantly, just like so, and comes then to test this there, that's when you can just put your stop loss in there. Okay, because right about there you would have confirmed that this level has been breached, because this level is very strong. Sometimes this level is very strong, but now when it's breached, you're now certain that, well, the market won't have more momentum to breach this level, because you would have drawn this this flow, which will act as your resistance when the market is now pulling back. Okay, so this would be the resistance again. So the market usually would fail to breach, and to show you some signs by showing you some candles which are which would be giving you some many weeks, and then you can just simply sell, put your stop loss above there, and then you can just put your TPs right about these levels. You look to your left, and then you check where the market has been reacting, which should be your previous these lower lower highs, right? So those will be your points of interest. Pretty much this risk to reward ratio would be sensible, right? So usually the market again does this. Again, this is another continuation pattern. The market does this, breach, okay, pull back, breach, right, and then comes back again to this zone, okay, fails to breach in, okay, and then you sell again. You put your stop loss right about there. Okay, some conservative traders put their stop loss right about there, but I think it's too much. But if you've got liquid, if you've got more equity, you can just put your stop loss right about there, because the market can also come and do this. I don't control the market, guys. I'm telling you, I don't control the market. The market controls itself. So unfortunately, I wish I could control the market. So for sure, some other traders who are conservative, they put their stop loss right about there, but I do put my stop loss there because I trust my strategy, and I know that there isn't any strategy which is very 100% sure or safe in the world. All the strategies that you see, whether it's ICT trader, whether it's SMC, whether it's whether it's BP, what and whatnot, nobody have 100% analysis, or nobody catches the trades 100% all the times. Even the top gurus in the market, they lose sometimes in the market. It's part of the game. But the good thing about trading is, when you now know how to trade, you now know how many times your strategy loses against how many times it wins, and you now know its risk to reward ratio. For example, my strategy that I use, that I've been explaining all the videos round, right? These strategies that I use, it's a combination of many strategies, okay, but it forms a one strategy, okay. So because I call it a one strategy, because it's like I'm a price action analyst, right? If I see an M setup, I use it. If I see double setup, I use it. If I see double tops, head and shoulders pattern, a flag, if I see like a ascending triangle, I use it. It's one strategy. It just depends whether which one played, and then I can just use it. To me, it's one strategy. If it fails at that time, it's fine. I just take an L, and then I just jot down on my portfolio that, well, I just lost. Then when I win, I win more, and my risk to reward ratio sometimes is 1:5, 1:10, 1:20. So I'm always on advantageous side than on the losing side, because that's statistically that's how you need to structure down your strategies, right? But honestly speaking, guys, sometimes I also lose. Even ICT loses sometimes. I don't even know whether ICT is even profitable or not. But I'm just saying. Okay, fine, it is profitable, but yeah, everybody is just profitable, right? In the market, people lie, people don't lie. Sometimes people, they make money, but hey, man, to be honest, there isn't any strategy which is pure. Even any top gurus, man, they lose money, bro, in the markets. But staying in the market for long enough and making money and withdrawing, that's what is needed in the market. You don't have to be, oh yeah, I'm the top trader, or the market will humble you, guys. Come on. So yeah, this is what it is, guys. I don't control the market, so always be safe in your try. Just do your analysis, do your back testing, check what I'm saying, if it's true or not. So yeah, as I was saying, this is the second what you call I was talking about continuation patterns, right? We've got a bearish flag continuation patterns, and then we've got this type of continuation pattern, which is the market comes there, goes up a bit to retrace, and then breaches this level, and then you wait for a retracement. When the market comes back to retrace right about there, you start to take your sells, your stop loss right about there, above, yes, then the market goes all the way down. Now, as you can see, you've got 1, 2, 3 entries. And the more you take these entries, the more your money expands, the more, of course, you move your stop loss. Your initial stop loss was there, it was now there. This stop loss is now there, So your trades start to make sense now, because you would have banked all this. You'd have banked all this money up until to this level, and then when the market comes down to this level, this is plus more. You can even close all the positions once you are satisfied. Whatever, you can do whatever you want. So pretty much, guys, this is how you trade this type of continuation. The opposite is true for those who want me to explain this type of setup on the bullish side. I'm sorry, I won't do that, because I think I've been doing this on previous videos so you can just screenshot this and just flip it upside down, and then you can just see how it looks like when you're bullish. So this is a bearish flag, this is a bullish flag, right? So yeah, guys, catch you in other videos when I'll be explaining more into these things with candles now. Whew. Yeah, man, thank y'all for those who lingered around for a long time. So yeah, I'm out.